In today's episode, we dig into why so many real estate investors work hard, grow their portfolios, and yet still feel like they're losing ground at tax time.
Having more doors doesn't mean more wealth. We've seen clients who continue to buy, but at the end of the day, they're having to either get a second job because they need to pay for a lot of expenses. It's really draining you financially and emotionally.
The fix is not more effort. It's a clearer strategy and up-to-date books. We're going to map it out with an investor and CPA today. Hey everyone, welcome back to The Freedom Blueprint. I'm Adrienne Green, and today we're with Ana Garcia. Now here we focus on how real estate entrepreneurs break free of the grind and get the freedom they wanted at the start. And Ana's awesome because she is an investor herself and a CPA who works with those in the real estate space. So, Ana, thank you so much for joining us today.
Adrienne, so glad to be here with you.
Now, for people who don't know you, can you give us an idea of what your real estate portfolio looks like today?
Yes. Right now, we have 15 doors. And I say we because I own one apartment with my sister, and the rest of the 14 doors is with my husband. So total of 15.
Awesome. And I'd love to hear your story of how you went from CPA to investor.
Yes. So I had just graduated college and was starting to work at one of the big accounting firms. It was my first job out of college, and I was auditing. And my senior, the way that these firms assign the jobs is you go to the client and it's the staff, usually one or two, and then you have a senior, a manager, and the partner. So we had the senior on site. It was me and him. And one day he starts telling me about Rich Dad, Poor Dad, and have you read it? And I say, what is that? Like, I had no clue, right? I was going to be a CPA my whole life. I was just starting my career, and said, you have to go read it. And so that's how I got so lucky. I feel very blessed because I was able to start my real estate journey very early on, I would think.
I love that. And it's so funny because, like we were saying before we started recording, I'm in Lima, Peru right now, and we visit bookstores a lot because my kids love to look at bookstores. And here we saw Rich Dad, Poor Dad. And it's one of the books that when we go in bookstores around the world, we see it pretty often. It's pretty distinctive and you can identify the name in any language really. But yeah, it's such a big difference. And it's crazy that you got introduced at your, your W-2 effectively for your real estate investing journey.
Yeah. Rich Dad Poor Dad, I think, is the one book that most investors say it got me started into real estate.
Yes, it's been pivotal for sure. Now, you got started after reading Rich Dad Poor Dad, and you have a property with your sister. Was that your first one?
It was. It was actually, when I first read the book, this was 2007 or 8, just when the economy was going down. And so it was a perfect time for us to start. And I wish I would have bought more. I wish she and I would have gotten more investments, properties. But we just got that one apartment. We got it for, it's Miami, and we got it for so like almost free, I would say. We paid $49,000 for this 2-bedroom, 1-bath. We did have to make a few repairs here and there, but it was awesome. I think it's valued now probably at easy $300,000, if not $280,000.
That's awesome. And then you continue doing the investing with your husband over the years.
Right. So we started little by little. First, we acquired a studio. Then we went for a 4-plex, and then finally got an 8-plex. So looking for our next investment now, actually.
And you focus in the Miami area with long-term rentals, or tell me a little bit about your niche.
We've done it all, I would say. We've done short-term rental. That was how we will begin the investments, and then we've converted into long-term. So we've done short-term, long-term, and we have the studio that we have is actually midterm, is 3 months at a time. Our area, we started in Miami, but Miami has gotten very expensive. Even these days that we see some more inventory out there, Miami has kept a lot of its value. It has decreased a little bit. It is an area that's very pricey, so we have moved also to Broward, which is the next county.
Awesome. Yeah, I will say Miami, when I read the national news now and the national real estate news, Miami's up there. It's hot right now. Everybody's talking about it. So I'm glad you got some nearby areas that continue to work for you in terms of investment. All right. So you've invested for a long time, right? A lot of real estate investors have not been investing since, 2007, 2008. I imagine you have some lessons learned for our listeners from that experience. And so what were a couple things that you would say you wish you knew when you first got started?
So I think, and this is something that you read, because I remember reading that when you start investing, you don't go for appreciation, you go for cash flow, right? So your investment has to give you cash flow, not so much be in an area where it's going to grow. But still not at the level they're in these days. But I would say that's one thing that, for example, the fourplex that we bought, we're lucky to invest when the times were still kind of picking up. The units are huge, they're big, and we thought, my husband works also in construction, so he kind of has that background, and he said we can even convert this from a fourplex to an eightplex, right? But then looking back, we realized it only has one bathroom. So when we convert it, we're going to have to do another bathroom, right? So in that sense, I think we learned that lesson. If it's something that we want to convert, let's make sure that it already kind of has what it needs to be able to grow into a bigger building. So that's one thing. And then cash flowing, very important to just buy. We bought that fourplex in a very good area. It hasn't cash flowed, I think, since we bought it. I mean, at the end of the day, we haven't lost money, but I think it's something that going forward, we want to make sure that it actually gives us return, like the actual cash flow.
Right. And that's a really good point to make. I mean, so many investors get into it and they don't get the cash flow they were expecting, right? And it's fine if you're okay with buying something purely for the appreciation. The challenge is a lot of people think they're going to get cash flow and then are surprised when they don't. Good to point out that that's something to really, really measure. Now, since we're talking about the numbers, let's talk about taxes. That's your jam, right? You know what? The funny thing is, taxes are boring to 99% of the population, but you get in a group of real estate investors and we're like so excited to like talk to a CPA or talk about taxes, right? It's kind of funny. Now, most investors, they think about taxes once a year in a panic, right? They're behind, their books are not up to date. They're always extending because like they don't even have their numbers done at year end, right? What if we instead treated tax strategy as an ongoing part of running the business instead of just a season? What would that look like for investors?
That would change their lives, right? And their investment journey and their wealth and everything going forward. What happens is we are used to, and I talk in general, taxpayers are used to just filing their taxes at the end of the year, but it's the end of the year is actually March or April. So the year that you're filing for has already ended, right? So a lot of the strategies, and remember, real estate investors, why we love to talk about taxes? Because the government, the IRS, has all these opportunities tax-wise, right, that we can take advantage of. So if you as a real estate investor are not looking proactively at your accounting, proactively at your tax situation, how are you even going to mitigate and really use all those strategies are out there for you to lower your taxes, right? With our clients, we actually work proactively. And what that means is we meet with our clients throughout the year. We go through their financials. We tell them how much taxes they're going to pay in the year and how we're going to mitigate that together. So it's more of knowing their books, knowing their cash flow, knowing what expenses are really affecting their bottom line. What strategies can we implement to make sure that that's actually mitigated? And then another thing too, when you're as real estate investors, we're always buying, selling. These are big decisions. You have to know, and taxes are going to get impacted. So when you know what options you have out there to pay zero taxes, some of our clients pay zero taxes, right? That's why it's important to be proactive.
This resonates so much because I know as an investor and as a business owner, it was so transformational, really, when I brought on one of my VAs to start doing the bookkeeping and accounting. So every Friday, all of our transactions had been categorized in QuickBooks, and I had an exact tally of where we stood every Friday, right? What the net income was, what, money I was expecting to have come in, what money I was expecting to have outflow with credit cards and everything, where I could really know where we stood financially. Every Friday was huge. It was amazing. So that's really where it needs to start, right, Anna? Like for you to have these productive meetings with clients, they have to have up-to-date books to start off with. So what do you recommend for investors who feel overwhelmed with their bookkeeping and accounting and they're like, I don't even know where to start. I hate doing it. I have time to do it every week, but then I never do it because emergencies and fires pop up. What are your tips to your clients when they come to you with that situation?
So a few things, right? I mean, I guess the first tip I would give is anything related to expenses, any statements, create a folder, and it could be something physical. right? And also on your computer, depending on what kind of documentation you have, and just put everything in there. Put everything in there. That's tip number one. So you keep everything in one place, everything organized. The second thing is we're investors. We love real estate, but we may not necessarily like and love the accounting, right? And it's okay. Accounting is very technical too. So it may be easy for you to classify something, you went to eat out, that's meals, but what about all the other, or the balance sheet that you don't know those accounts, what they're for, right? So the equity, all these things are like kind of like French to us, right? So at that point, you need to hire help. And it could be a VA. There's a lot of virtual assistants out there that do an amazing job with the books, right? So I would say just subcontract that work. If you don't feel comfortable, because I know it's your financial situation, maybe you don't know if the person's good, at the beginning, you have to kind of be on top of it. But once they get the hang of it, once you trust that person, it changes your world. Looking at your financial information on a monthly basis changes your world and your peace of mind.
Fabulous. So let's say somebody gets the help that they need because they're not doing it well themselves. And they're like, okay, well, what do I need to track now? Like, what do I need to look at? So what are the financial habits that you recommend people have, or the numbers that an investor should be tracking and viewing monthly if they really want to get a handle on their real estate business's finances?
So I would say number one, cash flow, right? Again, we invest to have more money, more wealth. So just cash flow, make sure your properties, you're tracking what are your expenses, what are your biggest expenses, and can you even lower those, right? Insurance is one big one that increased over the past few years, and now seems to be getting a little adjusted. Maybe we can get those to get lowered. So make sure you're tracking your cash flow, not just how much rent you're getting. That's number one. You should always have some reserves. Things can happen for capital expenditure sometimes. And even though we have insurance, we do need to have that kind of reserve on the side too, any expense that you weren't counting on, right? So I think those are the two things. If the properties are cash flowing, I think you're in a healthy position.
Okay. So if I was an investor listening and I'm, accounting is a foreign language to me, I could go in every month. I could make an appointment with myself or my VA, or my bookkeeper, whoever I'm using, go in every month into QuickBooks or whatever software I'm using. I could look at the statement of cash flows, make sure it's positive at the end, and look at those expenses at the bottom and be like, is this what I was expecting? Or any of these a surprise because they're larger? Is that accurate?
Correct. Yes.
And then I want to look at my balance sheet and I want to make sure I've got some reserves. I've got some assets in that balance sheet that I could use if an emergency popped up.
Exactly. When you're looking also, not just a cash flow statement, you can also look at your income statement, right? And if you use QuickBooks, you can choose if you want to see on a cash basis. So it's everything that came in, everything that went out, right? And so that's an easy review. You can also do it, compare this year to last year and see what changed and what things improved, what expenses are getting higher. So yes, definitely that's the way to review it.
And, I love that aspect in QuickBooks of how easy it is. You just click a button to compare it to last year. And that actually is in the SOP for my executive assistant VA. Every month they do that for all my investment properties. And if it's over a certain margin, they flag it for my attention. So that way I'm not having to do the routine check, but if something's atypical, they bring it to my attention. If you're a real estate entrepreneur trying to scale while doing everything yourself, there's a better way. The Time and Freedom Starter Pack gives you the exact first steps to reclaim hours each week with real support, including what to hand off, where to start, and simple tools you can put into place right away. Download it for free at adrienngreen.com/starter pack. Now let's get back to the episode. Now let's talk about your own CPA firm, because that is a business as well. You've had to build it up as an entrepreneur in the same way that real estate investors are doing with their real estate business. How have you grown and systemized your own firm so that you have the time to do your investing and your business and life? Because that's always a challenge for people in the real estate space.
Well, I'll tell you, I have 3 kids, and that's another full-time, that's another business on its own. And because I think you do have 3 kids too, right? So it is difficult when you're juggling so many things, right? As a woman, I think we carry a lot on our shoulders. And so we have to make sure that we're efficient. And this is when help comes in, right? So for my CPA business, just like for my real estate business, I have help. We cannot do it on our own. My husband works too. And so we have to make sure that we're systematizing things, right? So the way that I've done it in my CPA firm, first, I have a team of experts that get the work done. And I just keep the relationship with the clients. I keep the tax strategy, at the higher level. Everything else has to be done by the team to make sure that things are running smoothly, that no client is left behind. And so that's the way that we've done it. We also we have worked with QuickBooks for a long time. We just have kind of kept it that way. So any clients that come in, they usually have QuickBooks already, or we just integrate them into QuickBooks. And, these are things that also the people that we work with are the sponsors that help our clients do different strategies, 1031 exchanges, or the cost segregation. These are also vetted already. So we kind of know that whenever we send a client to these sponsors, these vendors, they're in good hands. And so that's the way that we've gotten to just feel relieved. And just the fact that we've specialized in real estate also makes it a lot easier, right? We fully work with real estate investors or anybody wanting to invest in real estate, starting their real estate journey. And that kind of makes it easier too. It's a system. We already know what we're dealing with. Accounting and taxes, it's not easy. Depending on the industry that you're working with, there's different strategies, there's different rules. And so by just focusing on real estate, everything flows in an easier way.
Awesome. There are two gems there that I really want to, discuss further. The first is how you leveraged a team. That is something that resonates with me. If you think of the cash flow quadrant from Rich Dad, Poor Dad, the way to get, we start as often as an employee, we move to self-employed, but the way to get from self-employed to business owner is to have people working for you. And that's a really tough jump for a lot of real estate investors. It's a tough jump mentally, right? It's all a mental game of trusting other people to do the work. What worked for you? What did you have to tell yourself to make that jump?
I'll tell you, at the beginning, I did not want to let go, and I was refusing to hire anyone, right? I would do everything myself. I said, I'll just have a few clients and I'll just do everything myself. I don't want to have employees. This was at the firm, actually, because at the real estate, we always had a manager. But it was really difficult to let go until I kept going to trainings, and they kept saying, you need an assistant, you need some help. And so I hired my assistant. That was the first, my VA. That was my first help. I saw everything when I wasn't on my desk. Things were working. My clients were being served. I was not stressing out about something that was pending. And so then I hired my second person, right? I actually promoted my assistant and I hired a new assistant. Then it becomes you need it. You really need it. But I think you always have to think about what is that 20% that only you can do, and then subcontract the other 80%, right? Make sure that data entry and, we have experts, and you have to know what kind of role, what kind of person, what kind of experience you need for the different roles, right? So, for example, in the firm, we have our CPA. She helps with strategies and she reviews the tax returns. She has that accounting expertise, right? And then we have the rest, and then we have our bookkeeping team. Again, there's experts in bookkeeping. We have our tax team. They're experts in taxes. And so then we have the admin people and the keeping the clients connected with everyone and the work flowing, right? So you need to know when to hire a professional, and that's how we've done it. It's worked out so greatly. I highly recommend it. And start with a VA. If you don't have anyone, start with a VA, definitely.
Right. Love that. And I appreciate that you shared how it was tough at first, but you had to just do it anyway. And then you saw the benefits. I think that's often how it goes. Now, the second thing that you hit on there for your CPA firm that I think I have seen myself is you're niching down, right? You niched down. And that's the challenge is that, as a CPA, you're like, I can help anybody who does taxes. Every American is filing taxes, right? And in the real estate space too, it can be like, everything is real estate. There's 5 million ways to invest in real estate. So talk to us more about this niching down that you did as a CPA and how that could inspire real estate investors to really niche with their investing.
This comes from that book, Pumpkin Plan, also. Fantastic book. I recommend it. There's actually a saying that says, when you're chasing 2 rabbits, you'll catch none. So you have to just stay focused on one thing. If you're investing in real estate and you want to do short-term rental, but then you want to do long-term rental, but then you're buying a multifamily, and then it's when you niche and you know that, okay, I'm going to just stick with single-family homes, and you see people being successful in so many ways, different asset types, right? So I think it's so important. It makes things easier. You know how things work. You can create more economies of scale, we could say, right? Like when you know the problems that exist in that particular niche. And so it's a lot easier to handle, and it's going to be more efficient at the end of the day.
Yeah, and I think that's exactly right. You can be more efficient and really focus on that. You said that so well, and so I think that was really great. Now, you sit across from a lot of investors at moments when real money is on the line, right? And you see the ones who can make clear decisions, who can move forward, or the ones who freeze or react emotionally and don't make progress. What separates those two people?
So the people that make the clear decisions are the people who know their numbers. There's no doubt about it, right? And with that comes also moving faster in the deals. You're going to sell property, right? You're going to pay capital gains tax. There's different options. When you have a team of experts behind you and you already know the consequences of each possible outcome, you can make a better decision. You're clear on what is the next step, right? And so that's what's different between someone that's prepared and someone who's not prepared. The one that's not prepared doesn't have books on time. They don't have their financials ready. Many times they don't have their taxes ready. And so how are you going to make and proceed with something if you don't even know if you're going to be able to work with a lender, right? So you can make better decisions when you're prepared, especially when you know your numbers.
That's so true. So true. I love that. And it's not just, part of it is that lenders want to see that latest tax return. And even before that, it's you don't even know if you should be buying that property, if that's a financial decision, if you don't have your numbers done. I love it. All right. Now, Ana, there's this belief, it's like a measure in the real estate investing space. The more doors you have, right? The more volume, then that's like more wealth and more prestige. Tell me the truth on that. Does more doors automatically mean you're better or wealthier?
Not at all, right? We've seen clients who continue to buy, but at the end of the day, they're having to either get a second job, like a job, because they need to pay for a lot of expenses. A lot of these properties, if they're old, if they have a lot of problems, and you didn't consider that and take it into account when you were making your offer, then you're getting into a problem. And instead of giving you money back and cash flowing and adding value to your life, it's really draining you financially and emotionally. So having more doors doesn't mean more wealth. We have to be, when we're buying real estate, we have to be savvy investors. We have to make sure that we're looking at every aspect of the deal and make sure that when we're buying it, it's not just, and another thing too, we see clients just going to buy real estate for tax purposes. That shouldn't be your number one reason. The taxes is the icing on top. But at the end of the day, you want to make sure that you're buying a good deal that's going to work for you.
Very good. I love that. Well, Ana, if somebody would like to connect further and learn about your CPA services or follow up with a specific question, what's the best way for them to connect?
They could visit our website, which is www.ana, with one N, B as in boy, Garcia, CPA.com. So www.anabgarciacpa.com.
Perfect. And guys, we'll have that in the show notes for you to grab from there. Thank you so much, Ana, for sharing all of this as an investor yourself, as a CPA who works with investors. Very, very helpful for people to think big picture and to motivate them to get their books in order if they're not already. If you got value from this conversation, listeners, do me a favor and subscribe wherever you are listening and leave us a review. Give us a few stars. It really does help. And then join me again next week for another episode of The Freedom Blueprint.